Now, the government claims it's well on its way to meet the 80,000 crore rupee divestment target for this fiscal year. Sapna Das joins in with all those details. Sapna?
Well, if you look at the ETF story in FY19 itself, it has been a bit of a runaway success. So, number one, of course, the latest tranche of the Bharat 22 offering was on tap mechanism. So, 40,000 crores worth of subscriptions have come in. This is well over 10 times of the base offering of 3,500 crores. 10,000 crores is what the government has decided to retain. They have not been able to do more than that, I suppose, simply because then the government shareholding in those stocks would have fallen below 52%, and that's the regulation. The government stakeholding cannot come below that level. So 10,000 crores is what you're looking at, and very quickly, if you look at the 80,000 crores for FY19, clearly 37,000 crores, 37,300 crores to be precise, has come in only through ETFs. So you had the first tranche of Bharat 22 sometime last year. Around 17,000 crores came in then. Then you had another 8,300 crores coming in through the CPSE ETF. Then again, with the latest tranche of Bharat 22, another 10,000 crores has come in. Close to 50% of your FY19 disinvestment target is being met by ETFs, and that is a very big indication of the kind of success which these ETFs have met with. There are lots of reasons behind it. A quick, small point that I would also like to mention is that probably in the latest tranche of the Bharat 22 ETF, even LIC subscription has been very much on the lower side. So it has been very well diversified. The response has been very good. Very quickly on the target now, 55,000 crores is where the government stands as of now, particularly after Axis Bank OFS. 5,300 crores have come in there, 10,000 in the Bharat 22. So around more than 15,000 crores has already come in what, 3 days time span in this current week. Expectation is that they are well on that target. PFC REC now remain to be concluded in the month of March. Some more buybacks are also in progress, and probably some other things that the government will like to think about if required in meeting that gap of around 25,000 crores that we are talking about right now. But as of now, well on target to achieve 80,000 crores worth of divestment aim FY19.
All right, well on target to achieve the divestment target. But let's move on to the big corporate story. Lenders have proposed to take charge of Jet Airways cockpit. The board has approved the bank-led provisional resolution plan. Lenders have proposed to convert their debt into 11.4 crore shares of 10 rupees each at a conversion rate of 1 rupee. This will give them a majority stake in the company. Ritu Singh is here to take us through the latest developments. Ritu?
Almost 2 months after Jet Airways defaulted on its repayment to lenders on the 31st of December, the board has now approved what it calls the bank-led provisional resolution plan, under which they have identified a funding gap which is required now of 8,500 crore rupees, which includes a proposed debt repayment of 1,700 crore rupees to the domestic lenders of Jet Airways. Now, what does this plan entail? It's 3 parts really. The first will be equity infusion from the promoters, some credit from the lenders as well, debt restructuring under which a portion of the debt will be converted into equity, and the sale of aircraft or leaseback, or in short, asset monetization, which will also be part of this turnaround plan. Now, this entire plan will be implemented under the guidance of a monitoring agency which will be externally appointed. Further, under this plan, lenders will convert debt into equity, under which they will convert 11.4 crore shares of Jet Airways, after which the SBI-led consortium will become the largest shareholder in Jet Airways. Now, this will be done at a price of ₹1 each for each share with a face value of 10 rupees, which will then mean that SBI-led consortium will actually have 51% stake. Further, as part of this turnaround plan, the board proposes to empower lenders to be able to appoint directors on the board of Jet Airways, and further, they're also in talks with the domestic lenders to extend some interim credit facility to them, but the terms of that are yet to be decided. Now, what happens at the end of this turnaround plan once it is approved by the lenders in their EGM on the 21st of February? The shareholding pattern will change this way, where the lenders will have 51% or majority control of Jet Airways. Naresh Goyal, who is currently the promoter, his stake will almost halve to 25.5%, and Etihad will also see its 24% stake falling to 12%. So overall, lenders will largely be in control, and the next step would be, what the lenders do with that 50% stake. But this is, of course, the draft plan. The final plan will have to be approved by SEBI, RBI, as well as the shareholders of Jet Airways.
Fabulous. Thanks so much, Ritu, for joining in and you know, spelling all of that out for us. But Lata joins us as well now. Lata, what are you picking up? Will a new promoter be brought in? And what's the way forward?
Well, at the moment, bankers say that they're not thinking in terms of a new promoter, that they will continue to monitor the performance by being board members. And so in the new reconstituted board, the lenders will have a majority. The expectation is, for the moment, the company will be run by a professional management, not a management of Naresh Goyal, not a management of Etihad, but a management that is professional and which will be under the supervision of an international agency. The expectation is that lenders will agree, because this is the first time that they are going to use the inter-creditor agreement that Finance Minister Piyush Goyal had mooted under the Sashakt plan. So that will require only 66% of the lenders to agree. If that is done, then hopefully this will go ahead. The expectation is that this 8,500 crore funding gap will partly be funded by equity funds coming from Etihad and Naresh Goyal as well, and more funds coming in from the lenders. So the lenders could participate even by way of equity, we do not know, and at what price, because they do want to retain a majority. Also, Naresh Goyal will have to give his securities in pledge. The lenders will not put in more money unless they get securities as collateral. So effectively, it will mean they have 76% control, because they will also have the 25.5% control of Naresh Goyal's shares, or at least part of it. And therefore, they will be able to perhaps make decisions. At the moment, banking sources told me that they are not looking at some private equity or the Tatas or any other participation. They believe Etihad is a well-run airline and that its expertise will be available to them. So it doesn't look like at the moment there are too many plans of other investors coming in. The idea is that these three entities, groups of shareholders, lenders, Naresh Goyal and Etihad, will continue to call the shots, with lenders, of course, having a giant share of the decision-making.
Meanwhile, Jet Airways results were also announced. Losses narrow for the company quarter on quarter as the fuel expenses come down. And Sonia is here with all the highlights. Hi Sonia, good morning.
Hi Sonal, good morning. Thanks for that. Yes, two key positives. One, of course, the fact that the board has approved the debt resolution plan. But also the other thing is that the losses for the company have reduced significantly quarter on quarter. So for the preceding 3 quarters, the losses were in excess of 1,000 odd crores. This quarter, the losses have come down to 587 crores. Edelweiss had an estimate of 1,090 crores. So the losses are even lower than what the street was estimating. The key reason for that is lower fuel expenses and lower other expenses as well. The fuel costs, in fact, have come down by about 2% on a quarter-on-quarter basis and about 6% on a year-on-year basis. So that really has aided the numbers this time around. Also on the debt resolution plan, I did get a chance to speak to a couple of analysts, and they did mention that what's the most important thing is the deal will be good for minority shareholders only if a substantial amount of debt is converted into equity. As of now, we only know that the banks will be the key shareholders, and there will be a new ownership away from Naresh Goyal, which is of course strategically a positive. But a lot will depend on the amount of debt that is converted into equity, and important to see how much debt the banks waive off. This will decide the value balance between the minority shareholders and the bank. So any more data on this restructuring plan will be awaited at the conference call that takes place at 4 p.m. this evening. Back to you.